Take care.
The longer the base, the higher in space. Hey, this is David Modell looking at the markets. We're going to talk about breakout gap ups. It's a powerful chart pattern that I like to look for. It does not work 100% of the time, but I found it to be quite useful, and it's something that you can look out for in your charts, whether you're trading on the daily candlestick chart, maybe you're a swing trader, or maybe you're an intraday trader and you're using 1-minute candles, 2, 3, 5-minute candles. This can work on almost any time frame. Okay, before I get started, if you would like coaching, if you'd like more help with charting, trading, investing, whatever it may be, putting together a plan, which is important. For the coaching, you can email me at davidmodell@gmail.com. Let's talk about the breakout gap up. So this is a daily candlestick chart for Apple. Each candlestick represents 1 day of price action. And what we have here is a pretty textbook example, okay? It's forming a base before it goes into space. And so the longer the base is, that means that when it's a long base, you've got tension building and building, because you don't really see tight sideways price action go forever, generally speaking. I'm sure there are exceptions to every rule. But, as it forms a very tight horizontal sideways range and it stays there and stays there, the longer it stays there, the more the tension builds, the more likely it seems, to me at least, that it's either going to break out or break down. Now, sometimes you see it just kind of gradually break out. You see small candles, and just kind of in a wimpy manner, it just kind of barely breaks above and kind of, drifts upwards. That's not super powerful to me. I'll tell you what is powerful. What could be powerful? What could be more powerful than not only a breakout, but a big gap up? I like to see that. That's the market telling me that not only is it ready to break out of this tight range that's been in for a while and all this tension's been building and building, it's ready to break one way or the other. Well, when you see that gap up, see, that's not gradually kind of popping its way out of that range there. It is decisive. Now, I don't have the volume candlesticks down here, but if you have the volume candles and it's a big green volume candle, that could be even more powerful as well. That might be confirmation for you in terms of volume. I didn't put that here because that might be distracting, okay? And so what oftentimes, not always, but what oftentimes happens afterwards is, well, the breakout. And we can see that right here in Apple. Now, you could say the same thing about a breakdown. If there's a massive gap downwards as well, then it might continue downwards, because that could be decisive as well. But this one's about breakouts, okay? But breakdowns, that gap down, that could be a valid concept as well. Does this work for 3-minute candlestick charts for intraday traders? Sure. Look at Twitter. Look how long that base is before it went into space. Let's draw those trend lines. Look at how tight this price action is. Yeah, I can draw horizontal lines right there, and that's super tight. All right, let's get rid of that. There we go. In a tight range there, drawing my trend lines as best as I can, and then it stayed right in there. Will it break out or will it break down? We all know what happened after that, right? Bam. Okay, that big old gap up there. Boom. Okay, and that's the market telling you something. It's telling you that not only is it ready to break out, and again, if there is a big green volume bar there, that's powerful. That's even possibly more powerful, okay? We saw what happened afterwards, all right? The breakout. Doesn't always happen like that, but I work with probabilities, okay? I don't work with anything definite in the markets, because markets are unpredictable like that. You don't find a lot of definite things. So, that was quick. It was short and sweet, but that's something that you can look for, all right? And when do you buy? Well, you can buy right after the breakout, if you want to, right at this candle. And if you want to put a stop loss possibly at this top line here or at the bottom line, your choice. I think a lot of people, just to be safe, would probably put their stop loss, if they were to choose between the two lines, at this top trend line here, the one that was resistance and is now a support. That's a possible place to put a stop loss right here, although that might be pretty tight. If the breakout was here and you bought here, that might be too tight of a stop loss. You might want to lower it a bit just to give yourself some wiggle room, okay? But if you want to put the stop loss here, that's fine. If you want to put it at this bottom support line here, you can do that as well in order to control your risk, which is certainly recommended in most cases. All right, so I hope this was helpful to you. My name's David Modell. This is Looking at the Markets. And again, if you want that coaching, if you want more help, you can email me for the coaching at davidmodell@gmail.com. If you like this video, please give it a thumbs up right now and subscribe to my YouTube channel and hit that notification bell if you haven't done that already so you can get updates whenever I put out new videos like this one. Thank you so much for watching and listening. I'll talk to you again soon.
Yeah, mate. Take care, take care, take care. They're gonna take it off me. Take care, take care. They're gonna take it off me. Take care, take care. I prepare my